Hello everyone. Welcome to the AI World Show. This is the banking and financial services and the insurance section. Thank you for joining us. I think we are missing one of our panelists, and he should be joining us shortly, Pak Kaspar. And so I'll just do a quick introduction. So my name is Jayant, the founder of PayOK, and the topic of today's discussion is how banks and financial institutions are making the most of AI in their organizations. So AI has been revolutionizing the industry by personalizing customer experience, faster credit processes, and making financial services smarter. In this industry revolution 4.0, any person who has access to the internet has the potential to generate data every second. This vast amount of data is only useful once we make sense from it. And companies that leverage on this data can change the digital universe from how we interact with our favorite finance apps and drive decision making. This will be the cornerstone of our discussion today. We will begin with a panel discussion and proceed to question and answers from the audience towards the end of the event. Today, we have a few esteemed guests with deep knowledge and expertise in AI and data science, who has already been introduced to you. So, without further ado, I think we would love to hear a bit about how the different banks and financial institutions in Indonesia are implementing AI and data science. Maybe we could have a round robin with each of the panelists, starting from Alex, just to brief us about how your organization is working with AI and how it's developing in Indonesia.
All right, thank you very much for that. So just checking, am I audible?
Yeah.
Good. Hello, everyone. So AI, part of a digital transformation for Allianz. So of course, also with the changing business world and expectations of customers, of course, we had to also embark on a digital transformation a couple of years ago. So in fact, that happened as a global campaign around mid-end 2016. And why we focused the first, let's say, 4 years, really to digitize and automate all our major activities. So we have now embarked, let's say, around a year ago on the aspect of data. And by that, not only focusing on AI itself, machine learning, but also on the full scope of data, right? So this is really about, we heard it already before, it's about clean data, it's about data privacy, security, it's about really creating insights that help you to better understand customer behavior, that helps you, let's say, to generate new products. And of course, that also later on enables you really to display, visualize insights then that help the business really, so to say, as an augmented service to really take better business decisions. And for us, indeed, so for the people that know really a bit the value chain of an insurance company, so the first POC that we did was in the area of claims, right? Because fraud is a big topic for us. So this is where we started. But then, of course, we leveraged on the knowledge that we gained there and then moved forward to sales prediction, leads management, lapse analysis. So that's really the beauty about AI, because you really find use cases in the whole value chain. So that would be my initial introduction here.
Right, absolutely. So being the only one in the insurance industry, it must be unique to see how we can use the same amount of data in other industries. Maybe we could see how it's used in the bank in Standard Chartered in Singapore.
Hi everyone. Thanks for having me. So my name is SIGRID. So I've been in Standard Chartered only a few months. So I joined in January. And prior to that, I also work in the finance sector, where I was looking after the data science team for Singapore Exchange. So this is just to give you a little bit of background. And my background is quite technical. So I have a PhD in statistics, and I've been working in the world of data for all my career. I think in terms of the space that AI is taking for the bank, I think bank and financial institution in general have been lagging a little bit behind if you compare to obviously technology companies. And but however, we are slowly catching up, and Standard Chartered is catching up. And the reason why we are kind of lagging behind, I think there are three main aspects. First of all, privacy issues. The data that we deal with is quite confidential. And so we really need to take care of all the regulation, the compliance, the governance, which kind of sometimes can slow down some of the processes. The second piece is why we are lagging behind is because banks are also kind of old companies. They were built maybe 2 centuries ago, and they were built on legacy systems. So it takes a while to upgrade the technology and to move to newer technology, for example, the cloud, which would be a bit easier for data scientists and machine learning engineers to do their work. So migrating all this system to new technology is the second reason why we are a bit lagging. And the last piece is talent. I think data scientists originally were really keen to join some of those tech companies, and also because of the reasons I just mentioned before, which is you need to have all the data and all the tools ready before you can actually have your data scientists. So as we have solved some of those issues, now we are starting to see more traction of AI and machine learning in the banks. And so in Standard Chartered, we have a central data office as well as data science team across the company. So we have data science in the regulation space, in the risk space. We have data science on the operation side as well. And my team was set up about a year ago to look after the corporate clients. So now that we had a lot of things that were done on the retail and risk side, we are also starting to look more and more into corporate and how we can serve these clients better using AI and machine learning.
Right, absolutely. It's also very interesting to see how the legacy systems have started to migrate into more cloud infrastructure in some of the banks as well as the microfinances. Over here, I think we have DODI as well from Adira Finance. Yeah. Hello, Pat. Yeah.
Okay. Yes. Hello. Hi, Jayan. Can you hear me?
Yeah, sounds good.
Okay. Hi, everyone. Nice meeting you. I'm DODI SOEWANDI. I'm the CIO of Adira Finance. I just would like to give you a brief what is actually we are doing right now. As we know that in multi-finance industry is kind of similar to the banks, but the segmentation of the customer is slightly different. And multi-finance, especially Adira, is actually most of the customer or the clients are the unbankable clients. So those are actually the main challenge for all of the multi-finance in Indonesia. It's difficult to reach the customer because they are not bankable. And also the second challenge for the multi-finance, especially in Adira, is that we are currently or previously the business still running on the dealer-centric, where all the sales order is coming from the dealership. But moving towards to the digitalization, that the customer-centric is becoming more important. And we believe that moving toward from dealer-centric into customer-centric will be the key success for multi-finance and Adira Finance. And as we know that in Indonesia, the population of the people is about 60% is still unbankable. So this is the main challenge that we need to embrace. And we believe that with the AI and machine learning, we can improve we can improve we can improve the process, especially for the graded decisioning. And hopefully that we can expand the Adira business and growth for the future. So I think those are the key critical points for Adira, is moving from dealer-centric to customer-centric, and also the challenge is how to embrace those the unbankable customer. So I think that's all for me for the introduction. Thank you, Jayan.
Absolutely. So I think we're on the same page on many of the problems, and hopefully through this discussion we get a better understanding on how different AI solutions are being implemented in other business sectors. So I'm talking about how we have been using machine learning and for different purposes mentioned earlier, like for calculating risk and for credit scoring. How do you guys see that we have used machine learning to actually enhance the customer experience? So from this discussion earlier, we had the unbankable population, we had the existing clients of the banks, as well as a sales force team to sell insurance products. So how do you guys think that we have been using machine learning and data science to enhance the experience for our teams as well as for our customers? So maybe we could have some insight from Alex first.
So hitting the right button here. So yeah, sure. So again, as shared before, right? So I mean, for insurance, AI machine learning is indeed really, it opens really a lot of new doors that were rather closed in the past, right? And again, that I could really take you now through the whole value chain, but let me just maybe pick two or three really steps in the value chain, where AI really makes a difference now and in the future. So when we talk about customer interaction, right, and especially insurance and also banking sector, right, we talk about offering the right products, right? We are talking about customer profiling, customer segmentation, and indeed providing the customers the products that they really want, right? So not only about, let's say, general products where you say one size fits all. It's really, so customer expects these days, they want to have tailored products that really meet their needs, right? It's the same in banking. So because primarily we have banking colleagues here, but also that's the same in insurance, right? And really understanding and having now more data, being able to analyze it, to process it, really helps us to really customize products as well as services, right? Which of course helps you to have a bigger or better interaction with the customers, which again drives then later on loyalty, right? Which again, right, maybe helps you to further increase your business and stay closer connected and keep the customers also with you, right? So this is indeed something where you can really say, this is where AI capabilities really help you in the future, right? But again, it's not limited to that. I mean, insurance is really about risk assessment, right? So risk assessment, the more data you have, right, the better you can assess risk, that better is also your pricing, right? And that again helps you then to offer, so to say, a better product at a better price to the customer. It also actually allows you to identify new areas, new, let's say, products that you can generate, because there's maybe new risks in the future that you can tackle with new products. And in this respect, of course, you provide more options to the customers in the market and definitely meet their needs in a better way than you do today or in the past. Thank you.
Absolutely. I think we have one of our panelists that just joined us, Pak Kaspar Simutong. So Pak Kaspar is the Executive Vice President of BERI in Indonesia, and is brought through innovation to the digital banking division by implementing AI in various products to help streamline credit and drive customer engagement. Welcome, Pak Kaspar.
Happy to join. Thank you so much. Have a good evening. Have a good afternoon.
Great. So perhaps you could introduce us a bit about how AI and machine learning is being used in BERI and how it has been able to affect or enhance customer experience and innovation.
All right, thank you so much for the opportunity. As most of you, I think, familiar with, Bank Rakyat Indonesia is the largest microfinance bank in the world. The problems is always about our operational risk and operational cost. It was always massive. So that's why we always finding the avenue of how can we reduce the risk of operationals by going digitals, of course. So back in 2017, we've started the journeys to invest heavily and massively on AIs, focusing on contextual risk management. So we've started the journey by investing lots of our data science and data capability into building credit scoring services, fraud detection services, and also merchant assessment services and customer profiling services. So back in 2018, the loan originations until loan disbursements took about two weeks back then. And then back in 2019, we were able to make it less than 2 minutes. So that's the scale that we're talking about at Bank Rakyat Indonesia by the advancements of using artificial intelligence in data contextual risk management, I think. Back to you, Jayant.
Yeah, I think that's a really interesting application of how data science can enhance the speed of how operations is done. Perhaps SIGRID have a few points also to discuss about how machine learning affects the customer behavior and the experience.
Yeah, so to go about the topic of personalization, I think there are a few things that I want to discuss. The first thing is, what does it mean by personalization, at least in our business? The second is, how do you manage to get there, and how do you benefit as a bank? So to me, personalization is just the act of tailoring a communication or an experience using the information that you have on your customers. So for example, just to give a very simple example, a few years ago, it was my sister's birthday and I wanted to give her a gift. And so the gift that I gave her was a pair of sunglasses, but it was not any sunglasses. It was actually blue, which is her favorite color. It was round because it kind of fits the shape of her face. There was a name on it, and I knew that she actually needed at the specific time because she has lost her previous sunglasses. So what I'm trying to say in here is I use all the information I had on my sister to give her the perfect gift that she wanted. So everything that I did started with the data. And so how do you get to personalization? The first thing, obviously, is to have your data in order. And in a bank as big as Standard Chartered, it actually took us a few years to do this. So the first step is really centralizing all the data, having access to that data, of course, with the proper governance, since it's highly personalized, personal data. This also means breaking silos, because in the corporate side, for example, we have a lot of different products. We have transaction banking is one. We also have financial markets. So our customer really, if we want to map this journey end to end, so having that 360 view of the customer, we really need to break those silos. And the other thing that is quite important in that journey is to be able to reconcile the data, because I'm not going to cite any client, but if I take the example Standard Chartered, a Standard Chartered could be named Standard Chartered in one system, Standard Chartered Bank in another system, SCB, PTA, LTD, and so on. So the naming convention is also a big issue that I have seen in a lot of my previous companies as well. So the AI machine learning here can play a role in reconciling all those names and do that name entity resolution. So once you're able to have all this data in your 360 view of your customer, then you start analyzing the past behavior. And according to those past behavior, then you can start understanding where your customer is. At which stage of the journey is he? Is he a new customer? Is he a customer that is very loyal? Is it a customer that is about to churn? And according to this, then for those different segments, you can recommend different products. And so the recommendation system that we are looking at is something similar to what Netflix is doing to really customize the different products according to how the customer behaves on our platform. And of course, you need to do this at the right time and via the right channel. So we work really, really closely with our sales people and marketing to really understand how we can hit this at the right moment. In terms of the benefits, of course, there is revenue benefits. And there were a few studies, but I'm just going to cite some numbers from BCG. BCG estimated that for every 100 billion in assets that the bank has, it can achieve as much as 300 billion in revenue growth by personalizing the experience for their customers. So it's really a threefold increase. So there is really a big, big potential that we are trying to work towards. And in addition to revenue, of course, you drive loyalty, you increase satisfaction, you increase the trust, and you get a better brand. So we are really building towards this. And we really need to do it right now because there are a lot of companies out there that are trying to do the same thing. Other tech companies who are also trying to come into the banking system, which will obviously be big competitors. So this is how we approach personalization at SCB.
Okay, absolutely. I think the whole personalization, what you mentioned, started early in the days of e-commerce websites, how they recommend products. And now it's very interesting to see how this has shifted to banking industry to make people more trusting towards their banks. And in terms of the data sourcing and the data pooling, we at POK also work with a few other banks trying to analyze transaction data. And because the difference between the acquiring banks, issuing banks, the data is not pooled together and sourced. So how do you think in terms of data cleansing and data sourcing, how can machine learning actually be used to work on all these different types of data from different sources to build a more credible credit score model?
Okay, still for me, okay. I will continue. Okay, so on the credit scoring, we actually have a very big team dedicated to risk analytics. So I'm not under the risk, but we work very closely with them because we are very interested in understanding the risk profile of our customers on the transaction, from a transaction banking point of view. And so on the credit scoring, we actually look at a lot of different components to come up with a score and assess the client risk. And how we use that score is then to make decisions on how much credit we're going to give to our customer, how much limits, what's the amount, what's the optimum pricing as well. So in terms of, we have a framework actually to work work this client risk assessment, and we use a bunch of different data. So I'm just going to explain a little bit so that you have a better idea. The first thing is we look at the product. So depending on what product they are utilizing, for example, if you are trading a derivatives product versus you are using a cash product. A derivatives product is a bit more complex, so the risk is a bit higher than just dealing with cash, for example. Then we also take into account the country. So because we are across the world, we deal with a lot of clients in different countries. Different countries will have different risk profile, and we actually get information from Thomson Reuters also, for example, in terms of incidence of financial crimes, quality of the regulation in different countries. Then, on top of that, we take into account the risk of the client relationship. So how long we have had the relationship with the specific client. This will be taken care as well. We look at things around the industry. So if, for example, you are trading oil versus you are trading clothes, it would be a different type of risk. We also look at the channels, so how the goods are delivered to the different clients, if it's by air, if it's shipping, if the route is actually respected. And finally, we also look obviously at the behavior, and we look at our internal data as well to try to flag behavioral risks. So we have a surveillance system in place, and we also can look at elements like news data. So all these different elements are being pulled all together into using AI and machine learning. And based on these different data sets, we can build a credit risk score for our customers.
Right. It's very interesting on how the data on different aspects can be used to identify the credit score other than just the transaction information. Perhaps we could also see how the 360 degrees analysis as well as the end-to-end customer model has helped other banks such as Bank BRI. Maybe Pak Kasper has a few things to share on how it actually improves the credit scoring models.
Thank you. So back in 2019, we've started to create one of the largest neural networks on the world about microfinance and also ultra micro segments. So we've built it with the intentions of creating an instant underwriting in less than a few seconds though. So the data points we've gathered, we've been using structured data and unstructured data as well. So we've been, for the structured data, we've been gathering data points from four corners of our data points. One is from customer profilings, second is on the fraud sections, and the third one is from the assets and liabilities, from the lendings and also on the deposit stuff. So based on the data points, we're trying to create what we call BRI score for all of 139 millions of our CIF inside the market in Indonesia. So based on that, we're able to provide an instant scores and eventually what we call the behavioral score for each and every users of us. So based on that, we're able to pinpoint and provide the relevant and also necessary for the customers as our recommendation engine for providing the necessary risk. So, and eventually, back in 2019, we were able to provide the digital lending credit scoring for both. We have two digital lending products by the name of Penangs and also Ceria. The NPL is still very low, still less than 0%. So that's why I think we are able to say that the credit risk rating is pretty good based on the models that we've been designed on BRI Brain, I think. Back to you, Jaya.
Right. That's very interesting insights on how it has been progressing over the years. Perhaps another question, maybe we could explore on how data science has been helping the operations of a company, especially during pandemic, such as the one we're having right now, the COVID-19, and how operations have been changing. How has data science helped in terms of managing operations in the whole company and making it more efficient? Perhaps Alex would like to share some insight.
Sure, happy to do so. Yeah, so when it comes, of course, to insurance business, and we know, I mean, it's really kind of a face-to-face business, so to say, right? And it's indeed, in the current times, the biggest challenge that we as Allianz, but I think all major insurance companies and also banks are facing, right? Usually we have a banking colleague then working in a branch, or we have our agents that's visiting the customer at home, and that's currently not possible, right? So you had to find kind of different operational and business models where you can, it still allow you to make business. And of course, let's say data science really helps you to actually organize a lot of work upfront already, right? So without having really this kind of face-to-face interaction, but also in terms of, so one, I mean, just to give you one particular example that we face now is, if we want to close a business, right, in the end, we need to identify, for example, that the customer himself is the customer that he indeed pretends to be, right? So this is then where a solution like facial recognition comes in, right? And indeed, that was something that, let's say, openly speaking, we planned for next year, right? And now these new times brought you into a situation where you definitely had to speed up, right? And maybe refocus on what you have to do. And that's why we definitely see also an acceleration really in terms of digital activity. And I think we all know about it, that the digital activity really got a bit boost in these times. And you need to find your way into that, right? But I think we have definitely found the solutions. Again, facial recognition is something, but of course, building such solutions also takes time, right? So we have been in a pandemic situation now for 3 months. These major solutions, I mean, you definitely run into a trial and error phase, but it's let's say whatever we build, so to say, as what we call like a non-face-to-face interaction, that is here to stay, right? So once you manage that, that will be part of your business model in the future, right? The same goes now also when you have, it's at least for us, right? So we have a lot of interaction in branches when it comes to supporting customers, let's say with a service request or with a claims notification, right? These kind of things are all enabled online these days. And while people hesitated in the past to use these tools, they are definitely now more or less forced to do that, which again helps us, right, to learn a bit about customers' behavior and then leverage on that and build the next big step forward, right? So these are definitely certain things. And then, of course, I think we all know about, chatbot virtual assistants. That is definitely something that also helps a lot in the servicing field, right, where you accommodate these new times.
Absolutely.
Thanks.
It's also interesting to note how the whole situations actually change our timeline in terms of pushing forward with data science and how we can utilize this moment actually to make the most of it. Maybe to wrap up, maybe we could have a final comment from Pak Dodi to see if there is any changes in terms of how the COVID-19 pandemic has actually affected in terms of microloans from the point of view of data science.
Okay, thank you, Jan. Okay, if I may just add on a comment here, basically, this is quite interesting questions, as we remember 3 months ago that the president announced that allowing those customer to have the payment postponed for another month or so, or even a year. So this is kind of challenging for us, because during the pandemic we are closing down all most of the branches. So what we do is basically supporting from the rules engine, credit rule engines that we have. We can analyze the existing customer, and also we can quickly fine tune our risk modeling, and also shifting the customer profile risk, so that from during the time we can identify actually who actually the customer is eligible to receive such capability to postpone the payments. And by doing that, also we provide the customer an apps where they can apply the restructuring of the loan through the apps without going to the branches. And within the a month, we receive almost 100,000 applicants is actually applying for a restructured loan. And because of the apps and also powered by the credit roll decision engine behind it, all the process can be done automatically to the system, and also the decision can be received by the customer right away. So that's really ease up of the customer, that during the pandemic they don't need to go to the branch to apply for the for the credit restructuring. But through the apps they can apply the credit restructuring. So this is the new things that we did during the pandemic for the past 3 months in Adira. Back
Right.
to you, Jayan. Thank you.
Yeah. So it's very interesting also to notice that how the data science has bridged the discrepancy between, the customer demands as well as the resources available to them. I think for us it's already time up. Maybe we'll open the floor to questions from the audience. Perhaps the anchor can announce. Yeah.
Hi, thank you so much. Well, I've gone to the Q&A part for the question and answer from the audience, and we're just waiting for the questions to come in on that. But as you rightly have concluded with your final take on that, thank you so much, Jayant. I'm just going to wait for possibly another few seconds. If we do have any questions, I'll let you know. But would there be something else, Jayant, would you like to conclude on for before we have the next panel in? Do you have anything to say, Jayant?
Absolutely. So maybe just to sum it up, we would like to thank all the guests for sharing their insights. And maybe I'll just mention a few points that I personally took myself as important considerations. One of them being in terms of customer experience, how that can actually be the game changer when we're talking about the new industry of digital banking. How personalized experience can drive consumer into either taking loans or opening accounts. And another important thing we found out was about in terms of fraud detection and how it has been changing during the different times. The credit scoring model as well has been, if I may say so, has been adapted greatly in terms of working more on data in comparison to the traditional banking methods of trust as well as one-to-one facing. So we have seen lots of applications in terms of data science, and I think we all will be working to a more data-centric future in where most of the decisions hopefully will be automated and rightly unbiased. All right, I think that's my final take on this whole situation. Hopefully we have a few interesting questions.
I'm just looking into that only, that we're just looking if we have any further questions from the audience, because we do have questions, but they were from the previous discussions. I'm just waiting for the audience to sort of tap in more questions for this particular conversation as well, Jan. But I would meanwhile like to thank all the panelists who are joined us with all the interesting take you had on this wonderful topic, which was all about how banks and financial institutions are making the most of AI. So we're just waiting. Otherwise, Jan, would you suggest if you could have one round of questions, possibly?
So perhaps I could
Yes,
pose a few of questions that's easily asked in the data science community.
Yes,
So when we're speaking of data, now the emergence of open data and alternate sources of information has emerged, right? Where instead of traditional models of just transactional and banking data, now we have psychological test that's being asked onto users, as well as more open information on how they transact in e-commerce as well as in Google. So maybe I would open the floor to the panelists to shed some light on how these alternate source of information can be leveraged or has been used in terms to actually help the existing machine learning models to be either more accurate or help customers even more. Yeah. So maybe Pak Kasper could or Pak Dodi could share a little bit more on how this open data and psychological questions can help in providing SMEs more credit-worthy loans.
Right.
Yeah.
Thanks, Jayan. May I start first? So, yeah, we've been using the unstructured data, I think, for a couple of months right now. We've been using massive amounts from Maps data from Google, of course, and some of them we've been using it to detect the right locations or not, and some other part of unstructured data. And second part is the psychometrics, I think. So we measures by how fast you can answer some of the questions that we uh, provide to the end users in our mobile apps. So based on that data points that we are able to detect and measures the risk that these new customers will affect to the lending that we will provide to them. So I think it's been a great moment, I think, for today's where the COVID-19 asked banks to be creative in order to be able to pinpoint some of the signals that we cannot get captures before. At this moment, I think we were being pushed by the locations that we have to find a better data points from unstructured data. I think. Back to you, Jan.
Jay, if you could just put your audio on.
Yeah, sorry for that.
No worries. So
maybe
Jay, we
Sigrid-
just have a few, we just have like maybe a minute. If you could just, ask it to one of your panelists.
Sure. Maybe to conclude, maybe Sigrid has something to share in terms of how alternate source of information, how we could personalize customer experience even more with open data and alternate source of information.
Sure. So we are B2B, so it's not exactly the same as having directly access to the end consumer. We are working with other corporations, so it's slightly different, but we definitely look at alternate source of data. For example, financial of companies is a really important piece that we take into account when we look at credit scoring or even the transaction piece. We also look at media data on specific companies. In addition, we use what we call more like qualitative data, where we actually work very closely with specific customers on projects to have that direct feedback on some of the tools that we are providing to them, some of the data feed that we are giving to them. So we do have that more kind of, is not on a larger scale, but it's more on a smaller scale to really have that understanding of why they like our tool and what would they want to see next in the tools that we provide to them.
Absolutely, a whole closed feedback loop. Right. Okay, so I think that's the final remarks for today's session. I'm not sure if there's any questions from the audience.
No, there isn't. And honestly, we're a little short of time now.
Sure. So perfect. So thanks a lot for your time and for sharing with us valuable information.